Super, super cool. Welcome to the Independent Investor Channel live stream on a Friday evening here. A Friday evening of not normal circumstances, obviously. Super cool. So hold on just a sec, guys. Live stream on a Friday evening. I'll take care of that. Awesome. I just want to take a quick second, honestly, and acknowledge the cooperation of this community. Honestly, I'm extremely humbled. I really am. I'm extremely humbled at the cooperation, the collaboration, the community vibe here. Honestly, there's kind of an old saying that I've always abided by in my life, and that's to try to surround yourself with successful people. I will be truthful and honest. There's not a whole lot of people in this world that impress me. And it's somewhat sticky for me to always make it my best effort here on a Friday to come and talk to you kind folks. I couldn't ask for a more devoted group of subscribers, number one. Number two, the group of folks who are actually doing channel content and pushing out content to their liking for the betterment of their viewers. I think it's absolutely phenomenal. I want to make sure and give out the shot of the weeks within the first 5 minutes of the live stream tonight. The first shout out this evening, quite simply and pretty much a long shot in first place, was Quest to Fire with getting the channel monetized. And I think she did it in a fairly reasonable amount of time. And for her individually, all the accolades on behalf of the Independent Investor Channel, and I'll speak on behalf of the group, honestly, and throw out a congratulations. If there anybody out there that catches the live stream after we post it live, certainly in an effort to bring folks together and really optimize the social media opportunity, and to get to speak to other like-minded, but certainly offering differing opinions about investing, the benefit certainly falls on the subscribers who make their way into the community free of charge, I might add. Things have changed so significantly, and I think for a fraction of the value that can be had on a platform like mine and many others in this community, to make your way in, sit back and consume content that either partially or if not wholly applies to you. And certainly if there's things that are said during the course of a live stream, or for you guys that are really legacy plank owners on the Independent Investor Channel, you guys know that I dig into the depths of motivation for people. I really think that this gig can be extremely humbling. I've said it many, many times, and I'm not a I told you type of fella, but if you haven't felt slightly humbled by this market, perhaps maybe you're not alive. This has been probably one of the most violent drawbacks. Certainly, I've lived through a lot of drawbacks, but this one certainly has its own unique characteristics about it. I think we can all agree on that. And for folks who are making their way to the investing opportunity, we collectively, and especially me, will not apologize. No way. That's just not how we work. What we do is we attempt to prepare all investors to understand the totality of the stock market in its whole. Okay, and this is what the stock market is capable of delivering. And just to circle back, I think the real underlying silver lining in this community that can be had by great folks like Rebecca, who's putting out great content on Quest to Fire, who's now newly monetized. Certainly, if you have not checked out the channel, I humbly ask for you to switch over. She's in the community here this evening, and subscribe to her channel. Second on the list this evening is a channel that probably doesn't need a whole lot of introduction, but I just reviewed the Gen X Dividend Investor offering for the top stocks of of March, I thought it was a great idea to collectively get a consensus. That way you don't have one opinion knocking out 3 stock picks of the month or 5 stock picks or how whatever that is. I think it's really interesting when you look at a collection of stocks. I thought it was really interesting. Minus Realty Income, there was a few on there that I had dabbled in. As a matter of fact, a good majority of them I've been systematically buying on the way down. So it was nice to see some of those. Honestly, there was a few more other aggressive names that have really probably taken it more on the chin over the last couple weeks, Boeing being one of them that comes to my mind. But it was nice to see Carnival Cruise Lines on there. It really makes me think that you guys are covering the entire spectrum. But I think the theme of that list that Gen X offered for the community, I will say free of charge. I will put a plug out there for the Discord chat. I'm going to join here shortly. So I really look forward to that. I really do. It's built up a really interesting product there. And I would encourage anybody that's catching my live stream again, either during the real thing or the replay, are certainly welcome. And what a great opportunity to not only wrap with investors like Gen X, but there's a lot of folks in this community that are part of that opportunity, as well as some savvy investors on there as well that just frequent the Discord chat, from what I understand, and offer their opinions on investing and just to strike up dialogue. And I really think that that's about 90% of the battle, honestly. If by nature of this volatility, you feel a little bit down in the stock market, and it's new to you to look at your portfolio and see some red there, and you get a little bit frustrated by it. Why me? I timed this thing wrong. Maybe I was a little bit too overexposed to the market. It's amazing to me how you can come in and get a little bit of support, and people who are also have maybe some more time on their hands devoted to the stock market can really offer some words of wisdom. And in a situation where you may not have that support, I think a lot of people may just exit the market. And that is something that we are trying to avoid altogether. I think to educate yourself up, lovely. I think to get a little bit tougher and to strengthen your risk tolerance, I'm all about it. To be self-critical over your program without being regretful, I think is the key. I really think that folks can learn a lot by being deliberately constructive about the program that they've put into place. Is there enough quality? Is there enough diversification? Is there enough dividend growth in the portfolio? These are just some of the things that I would throw out there. I would certainly say that if you're along the age spectrum, we break it up 20, 30, 40, 50, 60, 70, and 80, right on up the line. Okay. If you're a 90-year-old investor, you're welcome too. It's just that your philosophy and fundamentals have to be a little bit more about wealth preservation at your age as opposed to capital appreciation. So you have to be a little bit cognizant of the risk that you have in the market. So certainly a lot of fun to welcome and maybe roll out the investing opportunity to a lot of new folks. I had one of my subscribers drop in here, and I was going to use this kind of as an example. And if I wasn't mistaken, he was alluding to this being his first week of investing, 48 years old, retired veteran. Thank you for your service from the bottom of my heart and on behalf of the channel. That's amazing. Very, very cool. It was great to have you in the group. And there was a great conversation before. I'm actually cruising up here to try to find it. Yep, we're almost there. Yep, we're almost there. I'm going to do some more shout outs here. There's a ton of different channel creators that got cut off, but I think the theme of that was really to point out that there's going to be a lot of different investors that are going to try to seek exposure or maybe have been brought to the investing opportunity over the last 2 or 3 months, maybe within the last 6 months. And those are the toughest ones too, because they were able to enjoy a little bit of capital appreciation only to see it vanish over the course of the last couple months. Remember that in either case, watching the capital appreciation and watching the capital depreciation in any short time window really is somewhat irrelevant. If you'd like to do that to yourself to glean some level of tolerance conditioning, I deploy you to do that. I think that's good. I do it more so that I'm not trying to polish my tolerance. My tolerance is fine. But I am interested in the day-to-day stock moves to see where the market reaches and surpasses certain levels of resistance. I thought the market action today was fairly discouraging, to be honest with you. It was nice to swing back a little bit from the dollar perspective, but seeing it squeeze like that at the end of the market or right at the end of the close was somewhat discouraging. So the verdict is still out as far as I'm concerned. I'm not going to get into too much on really what's going on globally in tonight's live stream. I'd really love to keep the focus on where I like to keep the focus anyway, and that's on the community. So certainly to my top two shout outs of the week, man, I always try to do that within the first 10 minutes. Hopefully the little dab of exposure you get talking to my small but very loyal audience does help. Facilitate the conversation, turn new investors on to new ideas and new perspectives. And what a great opportunity. The ability to bounce back and forth from platform to platform and get to talk to so many different genres of inspection knowledge. I just think it's invaluable. I don't really think you can put a price on it. And we're going to continue to press the envelope. And I challenge each and every one of the channel creators to help me. And I will help you in turn by doing just that. All right. Third shot out of the week. It's worth mentioning JMac Investing as well. Put on a pretty enjoyable live stream on Wednesday. Had really good numbers in there. And he's trying to grow that product as well. I try to pop on there every now and then. I would jump in there every Wednesday because I just love talking stock. And I kind of feel like I'm on the sideline when I'm in the chat, but I'm not going to wear out my welcome there for sure. But Kyle, passive income investor, did drop on and offered some really good insights, obviously, with portfolios that have drawn back a little bit in value. I'm dropping an invite here, guys, into the post so you guys can have that and refreshed, so you guys can save that. But thought it was important to hear what Kyle had to say. Unique perspective on the drawdown, what he's thinking, what other investors are thinking. I think there should be, at least I would go out on a limb and say that I hope there's a lot of investors that are becoming a little bit more interested in the stock market. I find it highly intriguing to me as to why the market isn't more attractive right here in the low 20,000s. With the Dow and the S&P at 2,500, I certainly just have, I guess, a reverse way of thinking. The further down it goes, the more attractive it looks to me. And if you can look at it that way, I guess it's just the world of opposites in the stock market. I think the better off you'll be. I think the more you can deploy a little bit more of a strategy of, while everybody else is panicking, I think you could probably look to deliberately look and comb over the market. You should have an idea. One thing that we were able to take away from the Gen X listing, from the statistics of the stocks that the group was buying, is it was riddled with quality, right? There's nothing but quality in that list. I mean, trying to catch a knife with Carnival Cruise Line CCL at this point, I think that's the value picking that I like to see. I like that. I've deliberated over all three of the major cruise lines at this point, and I've opted not to put new capital to risk because it would have to come at the hands of being placed in my taxable account, and that of which I'm not really that excited about doing right now. I'm satisfied with the buy downs. I had 8 injection points into this drawdown, and I'm satisfied with the buy points. And however much time that needs to pass to realize and surpass those buy points, I'm satisfied with that. Obviously, I couldn't have, and I don't know if there was anybody really that successfully was able to just tag this market and maybe put some strategic capital to work on multiple days, on the multiple down days, or all at once. I typically don't recommend that type of investing. And, if you can scale into something when it's so volatile, it caught me off guard a little bit. I really didn't think that it was going to be as violent as it was for the drawdown. But hey, I've got a very short memory when it comes to the stock market. I'm very, very excited about the share base that I actually have right now in the portfolio. So very, very encouraged for the long-term prospects. Wish I could have done more, but I did what I could, and I was prepared to do so. So very, very satisfied. I want to do some call outs as well. Focus Fire Investing. Jamie is in the group as well. Most everybody here is probably already subscribed to Jamie. If not, you are missing out. Please kick over and help support the message. Next on the list is Hidden Freedom Investing. Dave is pretty much just an awesome guy. So that's good enough to click over and subscribe to the channel through YouTube free of charge. I can't really say a whole lot more than that. Super awesome investor, great guy, great advice. And I'm just proud that he is part of this community as I am with his. So highest endorsement there, Hidden Freedom Investing. I've got a couple others in the group here. I've got my good long-standing friend actually with Financial Investor in the group here. I've extended Brent the olive branch many, many times, and hasn't taken me up on it. But one of these Fridays, he's going to pop in for me. It would mean a lot to me. We've been doing this channel now for quite a while. I lose track of time. The older I get, the more fun I'm having. And it just seems like I've been doing this for a short amount of time. And that's typically how I look at this project. I look at this independent investor channel just like an investment. And quite frankly, it's a very, very special investment. It's very, very delicate. It's very, very empowering to me. It hopefully is empowering to the group. I, for one, don't get to derive the level of that opinion. I leave that to my subscriber base, to how impactful the message can be, and how excited you can be toward investing. But I do have Ryan Giffen in the group here as well. Great to see you. He's been the guest on the channel as well many, many times. Great to see you tonight. That's super cool. Minds in Motion also, who I would just love to have kind of on the top list of channels that I'd love to see on the channel for sure. I'd really like to get as many perspectives rolling through. This 2-hour opportunity that I roll out on every Friday is just that. And I'm certainly willing to open up the envelope to that. But I love to see multiple opinions, and I think that's where a lot of the magic happens. I really think when there's multiple opinions, I think exponentially the information flows through to the benefit of anybody making their way in here. So super, super cool. Wolf of Vibes. Here we go again, at work tuning in. You're devoted. I don't know if I could do that, but good on you for doing it, and I'm humbled. I really am. I meant what I said at the top of the live stream. I am humbled to be kind of the facilitator of this opportunity, at least on Friday evening. There are other opportunities within the subscriber base as well as the channel creator community to provide these opportunities to come together. And I like it. I really do. I seek out as many opportunities as I can, but I'm fairly busy with my day job. So and I do value my off time as well. I really do. I've been working really, really hard to shore up on the diet and the exercise as well. I feel like championship right now. I really do. So we're feeling good. Uh, as far as the investing goes, how do I feel? I'm really quite emotionless when it comes to things like this. I would rather not see a drawdown of that magnitude in the portfolio, because it almost doesn't give you a whole lot of time to even think, to be honest with you. And when you're making those buy orders, you're almost making them a little bit blind. You certainly want to take advantage of the volatility, absolutely, but it's somewhat disheartening trying to make those moves only to see the next following day really kind of consume a lot of those contributions. Now, obviously, your share base does increase, and that's the whole idea of where your focus should be. But it's tough. It's humbling. And this is kind of what I was alluding to. And you guys are going to be able to speak the speak after this. You really will. There's some lessons to be had. And I want to take the opportunity to congratulate each and every one of you, because you've made it this far. Okay. What's been done is done. Leave it alone. What's been done is done. You're not going to try to make any more riskier moves to make up for what's done is done. It's done. Leave it alone. Leave it alone. But look at the positive side of the house, okay? We're just going through a volatile time right now with regard to the unknown. And I think in one word, which is precedence, which we do not have with this current situation, that is what I think is driving a lot of the fear. I really do. That's why I think a lot of people have an overabundance of toilet paper right now, unless they're having an extreme amount of mummy parties. And I just don't know about it. I really don't know. I'm the wrong guy to buy into a lot of the panic. I'm the wrong guy. Okay. I was a commercial fisherman in Alaska. I don't fear anything. Okay. Where a lot of people fear hurricanes coming ashore, fishermen up in the Bering Sea, man, they go into the eye of the storm. Okay. They have to earn a living. And I find it interesting how it is panic. I did make a comment that it seems like if Americans can't have their fast food, or they have access to food for every 20 minutes, it's an automatic panic. I find there's some very, very staunch irony in that a lot of countries around the world can't feed themselves. So, I am the wrong guy. I really am. I'm also the wrong guy to come on and offer some level of direction on where I think the stock market is going. I'll offer my opinion, certainly. That's usually what people are kind of waiting for when they tune into a message like mine. And I do have my hypothesis about, what's going on. I think it's interesting with the VIX. I think the bond market today was really the telling tale. I think it was amazing. 30 basis points all the way up to close to 1%. On the 10-year note today, that was very, very irregular and quite frankly very erratic. That's why I really wouldn't read too much into the squeeze at the end of the market. I think I probably jumped up maybe $5,000 or $6,000 in a few minutes. It was weird. Okay. I would rather see a more gradual market. I know there's people who I respect very, very highly in the YouTube community. Joe Carlson is one of them. He's right there at the top, right behind Gen X Dividend Investor, as far as that really good quality content, level-headed content, speaking about investing the way that it needs to be spoke about in a landscape where there's a lot of people who are speaking in definitives, and it just drives me up the wall because we don't know where the market is going to go. And I would rather people say, I don't know to start, but say, here's what's happened. Okay. Speak about what it is that you do know, because there are facts that are disclosed right now. They're able to be had. So I think it's more prudent as an investor to focus on what it is you have control over, instead of focusing on all the stuff that you don't have any control over. I've had a few of my very, very devoted subscribers who have now come back to the channel and offering what it is they think about the direction. Run away from stocks. Stocks are a terrible investment right now. Well, again, if you look at it in the lens of a short fuse, you can come to that justification, but that is really no justification at all for making sound investment decisions with regard to movement in your portfolio. Just doesn't work that way. And I certainly respect everybody's opinion. I definitely want to revolve around the totality of offerings, and I want to hear the negative stuff too. I really do. If there's somebody out there who really thinks that the stock market investing is bad, I just need to know a little bit more about why you think that way. And especially if you've been on the sideline for the last 13 years of this bull market that just came to an end last week, then you probably have somewhat of a chip on your shoulder. And having a chip on the shoulder does not buy into my philosophy of having a short memory in the market. I've had my ups and I've had my downs. There's not an investor in this group that wouldn't admit to that very thing if they're being honest with themselves. And I know there's a ton of people in this group that are absolutely capable of admitting their mistakes. Absolutely. That's part of the gig. It makes you a better investor, and that's some of the deliberation I speak about, that each and every investor, this is now a good time to do that. You've been doled out kind of a sandwich here. And, as a prudent investor, you either buy or hold. Those are your options. Certainly don't want to panic, but, test your natural reactions, certainly to this market. Again, we're within the first half hour. I'm going to drop the invite in here. Certainly, I have a ton of material to talk about this evening, but I do want to open up the opportunity to anybody that wants to come on to the live stream with me. Don't be shy. I have enough of that for both of us, and I certainly don't bite either. But I just dropped an invite into the group here as well. I do kind of want to try a little something. I had something set up, and I kind of want to make sure if you guys can actually see what I'm putting on the screen here. This is my favorite opportunity. And I hope you guys can see this. This is kind of a test here. This is the ETF listing. This, for you guys that cover me, I talk about this all the time. This is awesome. This is the shopping mall for ETFs. This is the Vanguard's ETF site. There's 74 ETFs. If you guys want to know how to get there, here the long route, it's under investing. And then you kick down to Vanguard's ETFs. And then you browse a list of ETFs, and it'll bring you to this page here. The bond section is at the top. I've since liquidated my bond section in an effort to put cash to the side in my taxable account, render that little bit of profit before this severe downturn. I'm glad that I did, because bonds have actually sold off the last few days too. But if you cruise down here to the US stocks, I certainly want to bring everybody's attention over here to the year to date, and this is as of today. So interesting, down just over 20 in this dividend fund, the one that we talk about all the time. The two kind of flagship accounts here from Vanguard here, the VOO at down 23%. But pay attention over here to the year over year average since 2010. So we're in kind of a severe sell-off mode right now, if not stabilizing a touch, in my opinion. But certainly there's a ton of information on here. If you do click into one of these, this is really awesome to be able to provide you all the specifications on these ETFs. This is the little blip right here. So to put this stuff in perspective here, here it is. If you had $10,000 invested in 2010, it would have been off to the races, and boom, boom, boom. If you just held true on the S&P 500 at its market top, you were at about 36,000. And here it is worth right now at about 33,000. So give you a little bit of relative perspective there on that particular offering. So, hey, it's a lot of fun. And if you haven't been through that deliberation, I do encourage you to do that. I am going to bring a visitor to the Independent Investor channel online. If Mike gives me a thumbs up and he's ready to go and he hears me okay, I'll bring Mike. He just popped off, so he's probably doing some troubleshooting. No big deal. But I wanted to bring this to your guys' attention. This is really one of my favorite spots here. I have moved to a 50-50 posture in the market, but I think JMac Investing, he came out with a video that was pretty interesting, talking about how nobody wants to buy. Everybody wants to buy when the market's high, and really there's a ton of people that want to come up with every excuse. And I really think that may be what it's about. But I'm maybe would go a little one further and give people the benefit of the doubt and really say that it's probably an awareness or a lack of awareness to when it is it's okay to buy, and really when you should be a little bit more aggressive to buying or a lot more open to it, because in the consensus of the folks that I'm talking to, honestly, I really try to glean the opinion of the subscriber base right now. And I think there are some that are taking advantage and doing a little bit of buying right now. Hey, Mike, I see you there in the bottom. I'll bring you on here. If you want to give me a thumbs up and let me know that you can hear me okay, I'll throw the ears on and bring you onto the stream. But I want to make sure that you can get this thing dialed in. So if you want to give me a thumbs up and you're ready to rock, that'd be awesome. I look forward to bringing you on. Awesome. I see you there. I'll bring you on in just a second. So very, very cool. But I thought it was a good perspective exercise as well. Do the opposite. Okay. Again, I'm a very, very bad example because I'm not one of those fellas that's going to panic over anything. I train not to panic. It's part of my job. It's also part of my personality. So those two things go hand in hand with me. And I know perhaps maybe it does sell through YouTube. But if you haven't noticed, my videos have been fairly careful about not just putting shock recession factor out there over YouTube. Because we are not in a recession. We've just entered into bear market territory. Are we going to enter into recession? I will say no. Okay. That's just my thought. I think that I think it's somewhat irresponsible to say that we are. If you had asked a majority of people at the beginning of January whether or not we were going to move into recession, the answer would have been an astounding no. And I don't think a whole lot has changed, except for the unknown impact of how long these prospective closures are going to have on the bottom line of each of these businesses that are being affected right now. So it's one of those things to where I would rather say, at the time I would have said, I don't know. Right now, I'll say the same thing. I don't know if we're going to enter into a full-blown recession. I mean, what is going to be a recession? Down 40, 50% on the S&P 500? I don't know. What has me interested is how something like this can draw down the market so ferociously. And the technicals, honestly, or the fundamentals of each of these companies that we cover are quite good. The underlying economy is quite good. And the stock market being a forward indicating mechanism makes me think that the stock market is perhaps maybe overshooting the landing here and pricing in a recession right now. So keep that in mind, guys. I think the real takeaway from this is to stay in tune with why it is that you're investing. Acknowledge why it is that you were putting some cash to the side. If you didn't do that and you wanted to just kind of circumvent that step, because at the time it seemed like cash on the side was an absolute idiotic way of going about building that particular pillar, which there are some justifications behind that, but it seems more relevant now, does it not? To start to go through some of those deliberations and understand how wealth building is a lot more than just investing in the stock market and sitting back and waiting for your your chariot to the horizon is going to arrive for you. It's just not like that. It's a lot more. It's a lot more thoughtful. It's a lot more evolving. You as an investor now are going to be a different investor 1 year from now. Okay. So the lesson is on. If you in reflection of where you were when you started investing and where you are today, if you're honest with yourself, I think you'll probably be able to identify a lot of pitfalls, and I think you'll be able to identify a lot of successes as well. So give yourself a pat on the back. It's fine. All right. Life is good, man. We're all lucky. We're all lucky to be alive and work in this gig and having the opportunity to deliberate over this very, very serious topic. Everybody knows that I'm very steadfast in my message with regard to my delivery on this topic. We're not talking about video games. We're not talking about things that are a little bit lighter, more fun, sports trivia, things of that nature. This is the stock market, and it's serious for a lot of people. And the heartache that some of the new investors or existing investors are probably feeling right now is real. I do acknowledge that. I really do. And I take that very seriously. And certainly, if there was something magic that I could say to make you feel a little bit more confident in your ability, your confidence in your ability to just stay the course and stay with your existing program, that's certainly key. All right, guys, I'll throw another invite in here as well. Otherwise, I'll keep rapping and working the live stream on my own. I do want to run you guys through another exercise on one of my other favorite websites that I've got. I do want to make sure that I can click over here. So I want to cruise up and get to some of these comments. Certainly, man, I got a lot of really a ton of great folks in here. Mental note: workout during nationwide fear. It helps me. I don't know. I do it when I'm up. I do it when I'm down. It's just a part of my life, and I don't typically like the word exercise. I don't like the word diet, but certainly good lifestyle habits is the key. And if you can incorporate investing in that and justify it for yourself, I think it's super, super important. So Dave's throwing down some knowledge. I think that's what he meant there. If I misconstrued the statement, I do apologize, but I think that's what it means is keep your mind on other things. At least that's what it means to me. So it can mean whatever you guys want to you, but that's what it means to me. Put your mind on something else. Your investment portfolio is not going anywhere, okay? Those shares that you're working so hard to accumulate through dividend reinvestment, through capital appreciation, through dollar cost averaging, man, it's not going anywhere, okay? So just understand that. And sometimes a good strategic technique that I use is just not to look at it. If the swings are too much for you, and these are volatile swings, I might add. So if you tell me, hey, I'm cool, Ryan, I got this licked, I'm all right, I'm square, I'm on the level, right on, man, I'm with you. We can move on to other bigger and badder things in the investing community. But if it bothers you, scale back on your awareness that you think is so important, and don't look at it. It's not going anywhere. Let it work. Let it do its thing. But you looking at it, running yourself through some level of self-deprecating idea doesn't help at all. Okay. So sometimes it helps just not to look at it. So still need TP though. I mean, this is this is why we tune into this message, so you can get little tidbits of information here. But yeah, I don't know. Again, I just don't know if people are like having mummy parties or what. I don't know what the deal is, but I don't know, guys. I'm not downplaying what's going on. I'm downplaying the reaction a touch. I think it's a little bit nauseating as far as that goes. Because again, I'm a bad person to tune into if you want me to get up here and freak out with everybody else. I won't do that. I'm really just satisfied by that phenomenal chai tea that I made right before the live stream to come on and help me not get parched, because it's looking like I might have 2 hours of live stream all to myself. I love it. Oh, I love it. It's super cool. The JMac Investing's in the group. I gave JMac a shout out as well. It's doing a good job. I don't even think he had that scheduled for Wednesday. That was cool, man. Jason's a good facilitator, man, and he's coming into his own. And I say that with all due respect, because it's so cool to go back and watch some of the first videos that you put online. Go back and watch my first one. I'm just like, it's pretty funny, and it's treasured because you can't go back. I'm a lot more confident. I'm not quite where I want to be. But it's fun to leave that stuff on to see kind of the evolution of something that I felt very passionate about when I started this project, but hadn't quite come into my own. And I think people can appreciate that. Certainly, this is my time that I give to you guys. Absolutely. I just appreciate you guys making your way on here. CC, good to see you. It's rocking. It's great stuff. Had some good comments in the group from Guy Sargent 213 as well. Trump is going to support the House bill with paid sick leave. Good news for that. I'm obviously ironic about the time of the address at 3 o'clock Eastern time when the state of emergency was declared. Today was kind of when the short squeeze started to occur in the market. It actually, there was a point today where it actually went down to almost even. Almost took a strategic position. I shoulda, woulda, coulda. And I was very seriously thinking about doing so. But again, I'm being very, very reserved in my buys right here outside of the Roth IRAs, which if you guys want to join my movement, I highly encourage you to follow me on Twitter. I'm really trying to get the Roth IRA caps of $6,000 lifted for 2020. And Jared Odell thought that it probably would be beneficial to the group to just throw 2021 on there as well. I concur. There would be nothing more happy to me than have them eliminate the caps of contribution for 2020. Then I would show some emotion. You bet. You want to help the little guy? I don't need a stimulus and I don't need a handout. You lift the Roth IRA cap, I'm solid. Thank you, government. I appreciate it. For once, you've helped me out. I appreciate it. Good stuff. Appreciate you making your way on. Absolutely. Got my good friend, All Good is in the group, the glue that holds it all together. Very devoted member of this community as well, and is also on the Discord chat that I mentioned at the top of the live stream. So super, super cool. I'm still very, very satisfied that we were able to meet a couple weeks ago on my most successful live stream. The irony in the whole thing is it was super successful and personal to me. It was the one that got demonetized. So go figure. We'll fight these battles together, guys. Honestly, we're trying to build a correlation or a coalition of a small niche, a voice over the YouTube community. And the bigger the voice, I thought the bigger the influence, quite frankly. And honestly, the first thing I ever said on the channel was to empower one investor at a time. And if we can get to one investor at a time to identify the many, many benefits of self-directed investing, then we're winning the battle. And the very, very recipe for that justification, I'm going to provide to you guys now. Okay. So for you guys that have seen me do this, you know what I'm talking about. For those of you who are wondering what in the holy heck I'm talking about, I'm about to show you something that's going to change your lives, and it's going to let you understand that you are in a class all on your own. Okay. Self-directed investing is a very, very unique thing, that of which a lot of people don't know exists. Okay. But I'm going to kick you over to something real quick. I'm going to show you what I mean. Hopefully this works. I've done up a small exercise for you guys. I got to change something over. I'm going to jump in here. I'm going to go here, and I'm going to show you something. I want to make sure that this carries through to the stream. Hopefully it does. Yeah, it sure does. Awesome. I think it does. You bet. So for you guys that have been with me a while, I leave this link in the description of every video. I've taken some freaking heat through the channel for recommending this one small aspect of this. This is free of charge. I'm not affiliated with this group. I don't even know if they're good or bad, but this piece of information is incredibly valuable for justifying why it is that we do what we do on this channel. All right. So I'm going to kick over and I'm going to walk you through the very simple deliberation on the compounding calculator. But this compounding calculator has its own unique characteristic that really drives home the very backbone and the very essence of the Independent Investor channel. If this channel was just about investing in and of itself, I would not have this channel. I would not. This is the very niche that I feel like we deliver on this. And I'm kind of the one that I feel like has brought it to the forefront and really put a name and hit it on the head as far as what we're doing, and really helped kind of push the envelope forward, because the rap was pretty bad on this style of investing. It was somewhat faux pas in that if you did not seek out your exposure in the stock market with the services of a financial planner, you were looked down upon. And most people without a support network, I would say, do get involved, and they can get discouraged off of the market. And it's very communities like this that offer that support structure free of charge, that allows you and your personal substantiation of this program that I'm about to show you, that'll really go lockstep and help you hold the test of time. If you understand this deliberation, you will understand why it is that holding through these volatile times and investing in the market during these volatile times absolutely gives you a strategic edge over time. And here's why. I'll click over and walk you through this deliberation. Anybody can go through and play with the numbers as you see fit. I do, for standard example's sake, draw in $1,000 of starting capital. Nice round number. You can throw 5, you can throw 10, you can throw 50 in this, whatever you want. But for a 40-year time horizon, with a $500 per month contribution, you guys can play with these. If you want to do $25, you can see how the numbers change. If you want to do 150, 250, whatever you want, you can change these figures to see how that can affect your outcome in the future. Now, the real key to this is to estimate a rate of return. Now, 7%, the first website I took you through, the VOO is still returning over 13% a year, even with this volatile drawdown, okay? So you can estimate on the low end, you can estimate on the high end, whatever you want, whatever suits your fancy, whatever gets you the substantiation that I want you to understand for yourself. But this is the key. This 0.03 is indicative of the expense ratio over the Vanguard's S&P 500 VOO. And then we put in a standard 1%, 2%. I've done a lot of research on this and have found that the industry standard is closer to 3%, with all of the collective fees that they assess over your portfolio, and collectively as a portfolio manager, the assets under management that they have under their care. And you come up here and you just view report, and this is the magic, really. This is the magic. It breaks down the fee structures in column 1. This puts you up over 1.25 million here. The difference between this fee at 0.03 and the 2% fee is $500,000. So you see the difference here between the 1.247 and the 0.75 million here. Now, the contributed dollars over the course of this lifetime remains at 241. The magic is in the compounding effect, as this takes a parabolic type of approach toward that. And this is why we invest. We don't invest down here for years 10 and 20. We invest out here for what is happening on the latter end of this compounding effect right here, okay? But the real magic and the real takeaway is understanding that if we can keep these fees to a minimum and then chalk this into a self-directed account, which is going to be indicative here in fee structure 1 as opposed to fee structure 3, you can see the difference here just in $500,000 running a program that I feel like is absolutely realistic to a lot of different investors. So if you have never seen that deliberation, good luck sleeping tonight. If you are one of those people that look in the mirror and say, you know what, I do believe that I can do it. I have got self-worth. I want to do this. I don't want to believe anymore that this isn't possible. I've just given you the very fuel that helps me justify this very program. And it helps a lot of other investors, new investors alike, really substantiate why it is we put this message out in the way that we do. And it comes back to my point in the entrance video to the Independent Investor channel. I always say it's not necessarily the dollars that you make, it's the dollars that you're able to make and also preserve within the account. And that is absolutely key. Just by nature of the program that you select can save you hundreds of thousands of dollars into the future. And if you don't understand what I just said and you want to roll this back on the replay and watch it again, absolutely. But if it's your first time hearing me go through that deliberation, congratulations, you've just changed your life. No big deal. Welcome to the live stream on a Friday evening. I can't make you a better person. I can't solve your deficiencies. I can't make you eat well. I can't make you quit smoking cigarettes, but I sure as hell can get that investing mentality in line enough to where it's going to stick. You're going to go through volatile times like this, and you're going to be able to be steadfast in your program because you know, in fact, you have a strategic edge on absolutely everybody else that's seemingly gravitating more toward that high end of the expense, acceptable expense. A lot of people accept the status quo in the investing world right now, and it's disheartening. I know for a fact that I'll go through my entire life only getting to a few people, and hopefully we can change that over the course of the channel. I certainly provide my best effort in this community to try to provide this small 2-hour window every single Friday for people to come on and deliberate around this topic. And that right there, what I just shared with you guys, is the absolute backbone of the channel. So really appreciate it, guys. Christian Gonzalez is in the group. Really appreciate you making your way in. I know there was a visitor that popped into the stream and popped out, I believe, probably for technical difficulty. No big deal. We'll keep trudging on. And I just threw another invite in there if you guys want to pop on here. Obviously, I'd love to spend the tail end of the live stream. You channel creators that are trying to build an audience, certainly I don't mind blowing down barriers for the entire community, as well as blowing down barriers on this topic as well. The message is that important. That's why I come on here and spit venom for 2 hours, because we have an obligation to get to as many people as we possibly can. And that's exactly what we're going to do. And we're going to continue to do it until we start to get some attention in the industry, if we haven't already started to get some attention and get some eyes raising, because at the end of the day, we're right. And at the end of the day, being right means a heck of a lot more than being persuasive. All right? Good stuff. So I'm going to cruise down here, see if I can. There was some really good comments. The StreamYard kind of cuts them off and doesn't let me get to all of them. Most kids don't even get symptoms. They just infect the teachers. So that's great. 30 people in the chat. Don't forget to like the video, folks. Let's get this one out and reach 200 tonight. Yeah, I don't know if we can do it tonight. I might need the services of another collaborator. I don't know if I've got the power to generate another 75 viewers on the live stream. Quite frankly, my approach typically isn't on the what ifs, it's the what I have. So my focus will be on the 125 strong that have made their way in here during volatile times to discuss this topic and discuss how tough the market is. Just had JMac within the first hour actually pop in. He's popped into the bottom of the stream. I'll let him get dialed in there. If he's ready, he can give me a thumbs up. I'll pop into the group. JMac's a friend of the family here, absolutely. So JMac hasn't been on the live stream for the last little while anyway. So want to welcome him back, certainly. And we can help collaborate the remainder of this live stream for the group, and I'm going to try to let J-Mac address the group, and I'm going to try to get to some of these questions in the group as well. So let me pop J-Mac on here. Awesome.
Evening. How's it going?
What'd you do away with the ears or what?
No, this mic is like kind of like single directional, so it doesn't affect the yeah. You hear me good? You good? We good?
Yeah. You got me good?
Yeah.
Okay.
Gotcha.
Cool. Give me another mic check, Jay.
Check.
I can hear you fine through the computer. What's going on, man? So talk to me. I was going to pop on Wednesday, but it was cool. Kyle popped onto the live stream. That was cool.
Yeah, I'm surprised people are so leery to jump on. I always kind of waited out, and I want to see who might jump on, which is cool. If tonight, but yeah. Also, running it on Wednesday, sometimes I like to just listen to you as well. So
it's just more fun for me, to have a collection of ideas, and hopefully the crew benefits from that. And that way we can use our specific offerings, our channel specific uploads to address those specific topics that we want to get out there. Man, they're infinite. This topic is infinite. It really is. You hit on a couple cool ideas this week too. I liked them. I really did. As well as me. I thought I had some good ideas too. Kind of got misconstrued a little bit with the risk versus reward. I think some people hit me up and was like, oh, you can lump sum invest and come out better on the end. And I think when you're comparing it like that, yeah, if you get an 8% rate of return guaranteed at the time that both investments go in, that holds true. But nothing is that predictable in the stock market. If you believe that over the last 3 weeks, man, you haven't been paying enough attention, because this has been pretty volatile. So
Victor said, waiting on South Bay. It might be the battle. No, that's like an inside joke. Yeah, there's a sometimes I specifically go against the grain. Since the beginning of my channel, I've intentionally, sometimes probably irrationally, taken on topics and taken on things that are controversial. And so, but because I'm super active on social media.
You are.
And so once I start reading a whole bunch of posts about people being irrational and erratic during this downturn, it kind of prompted me, and I would engage some people. I engaged a few conversations on, which is a lot of times a bad idea during.
I think part of me thinks that you like some of that. I don't
know. I do. Sometimes I do. Yeah. I mean, but I also, I still have, like in my group, in my Facebook group, I think people are surprised because essentially I'm in every conversation, but I have the advantage of working from home. So sometimes I think they're surprised that I'm just chatting with them, chatting with everybody. And, so, yeah. So I'll take jabs at people just jokingly. But I have the ability to be cordial about it, where some people don't. They take it and they get offended and they go, take it wrong and whatnot. So
I hear you.
During this time, some humor is actually, it's great right now to have a little bit of humor. Like
I have the luxury to lose a ton of money in the stock market. It's a beautiful thing, man.
You got to laugh about it sometimes. I mean,
I mean, if you're getting down on focusing on that one column in your portfolio, you really do need to stop doing that. That is my serious advice. It's just you're focusing on the wrong stuff. Why did you start buying dividend stocks? Why did you buy, stocks that paid you a dividend no matter what the price is? And it's like those quarterly payouts can't come soon enough now, and it's like, oh man, does it seem like they're less than what it was appealing before? Nah, man, that's one of the small aspects as to why you do what you do, is to grab those dividend payouts, and lower that cost basis over time. That's just the ingredient is
Well,
time.
yeah. So here's my take, and here's, like, sometimes I don't articulate it well enough in my video, and I'm working on that. So here's my philosophy. So when I started investing, I set up a schedule, and I'm investing every week a certain dollar amount, right? Okay. The market, while I've been investing, there's been a couple 5-10% drops, right?
Yeah.
And then this drop, right? So my thing is, I'm consistent. I had a plan. I have a schedule, so I'm just sticking to that plan, right? And on every time since I've been investing, there's been a drop. I've found a way to invest more money during a correction or a dip than I was investing on that regular schedule, right? And so, but people just really just kind of go bananas
Yeah, but
during a
if you would, Jason, I want to comment on that a little bit, because I've gotten to know you a little bit, and you haven't been investing for decades, right?
right.
So let me ask you this, and it's kind of a loaded question because I kind of know the answer to it, but can you really substantiate all of this? Because I've been watching your portfolio, right? It really hasn't adjusted down because you've been doing some really good heavy buying in it. Good on you. But here's the thing: what's hard to substantiate by doing every single one of those moves, they're all positive and they're going to pay you back in time. The difference is you've been investing 2, 3, 4 years, Jason, something like that. Is that right?
Well, passively for about 6 years, but
Six?
like
Yeah,
like self-directed, like you talk about, a little over a year now. So it was
sure.
February 2019.
See,
Um,
my point is you're going to be given one of the greatest gifts that a self-directed investor can give is some substantiation behind those moves. And it's not going to happen next week, brother. It's not going to
right,
happen. It,
right.
maybe 2, 3 months in the very, very short term, but it could be longer. We'll see. Who knows? Maybe we've started a downtrend of epic proportions. I've already said I don't think that to be the case. I don't. I just think this is a cross current. That's what I think.
Yeah.
But eventually, down the road, you're going to look at this and be like, I was right.
Yeah. I'm just all in, and that's it's my it's probably to a fault that I'm all in.
As
So
far as cash, as far as
no,
cash,
I'm just all in on investing. So, like, um
I don't
I
think
guess
you're
I
very
guess what
wrong.
I'm saying is this market correction, while I just like you, just like everybody else, has butterflies in my stomach on a day when the market drops 10%. And no, my portfolio, it got down to, I was at the max bottom so far, it was down 28%. It went I had a portfolio of 38,000 and it was reading 30,000, 28% down. And my Roth IRA is annihilated, right? But still, I'm still, like, honestly, just like Gen X, I'm numb to it. And I have a plan and a strategy. I'm 41 years old. I'm going to be investing till I'm, the goal is the portfolio is going to eventually invest into itself after
Yeah.
10 or 15 years. This is just part of the deal I've signed up for. I'm not gonna. The only Someone asked me in a comment in my video, what would cause you to not be confident? And I said the only thing that could do that. It was a really good question, and I answered it honestly. The only thing that could right now is me if I lost my job or health.
Yeah, absolutely.
Legit.
Absolutely. That's real talk right there, man, for
Yeah.
sure. Yeah.
So outside of those two things, I'm going because I want to get to a place where my portfolio is providing enough income that if I were to lose my job, I could offset it maybe by some side hustles and go hard on YouTube.
How stable is your job is pretty solid, right, Jason, with your
It's
specialty?
it's I mean I'm a software developer, but I was just thinking about this in the last week. The software that I build is for a company that sells to water sells devices, smart devices to water utility companies. So I'm in a recession proof kind of niche.
Yeah.
Everybody needs water.
Amen. Amen, brother. I would I would say with your posture about your aggressive investing over this downturn, where I was talking, I don't know if you picked up on it, Jason, but I had a lot of people like, "Hey, is it okay to get involved in this market?" And I was always like, "Take 20%. Take 20%. You know, if you've got 10,000, invest 2,000." And that was just to get people thinking, "Whoa, what did he just say? It's okay if I like not invest the entire wad at this point?" Yeah, it's okay. Maybe you want to bump it up to 25%. I don't know. That's just my feeling. I would
Yeah,
swap that right now. I would swap that and say maybe even an 80-20 mix if you were, 80-20 or even more at your age, you're young, right? So it certainly benefits. Right now, I'm pretty much maxed in my investing accounts the way that I want. I've got my kind of my foot on the accelerator where I've said when the market was at its high, I was probably in third gear. Like right now, I'm good. In these low 20s, we've been given years back, and that's the way I look at it. You know, market's down 23% right now. We've been given years back. you know, it's as if we've
yeah,
taken a step back in time and we get to invest like it's 2019. Woohoo! You know, I,
yeah. I'm looking at the charts, and I mean, some of these companies are literally at places where they were in 2012, 2011.
yeah, man,
It's unbelievable. So,
yeah, for sure.
um, Joanna asked, won't the dividend paying stocks dry up during the downturn? So, so the focus right now for me is high quality blue chip companies that have been paying dividends for 20 plus years that have so these are companies that have weathered so many of them are dividend kings, which means they've been paying dividends for 50 plus years. Dividend aristocrats been paying, well, not only paying, these companies have been raising their dividends for a dividend king's been doing that for 50 years. A dividend aristocrat's been doing that for 25 years. And there's the contenders and challengers that have been doing that for 10 years, which means they started around the last recession time. So no, they won't be drying up. They'll be raising their dividends
No, man.
as well.
Just to add to that, Jason, it's times like this where I look at my portfolio and I'm like, I own the best quality, and that's what helps me. I'm fine. A lot of people said that it was a boring style of investing. I mean, I went back and forth with Jeremy on the Financial Investor channel on this very philosophy, and I don't watch Jeremy anymore. That's just my personal choice.
Yeah.
But two different styles of investing, certainly, and both styles can work. They really can. It's just again, it's hard to appreciate times like this until you're in it, and everybody reacts different. They really do. You said something about butterflies in the stomach. That's a real reaction. I think it takes some courage to come onto social media and say something like that. I really do. Um, I'm a bad example. I really am. I'm a bad example to say that this bothers me at all. I will say this in all honesty, I don't like to look at my portfolio and see that it's down, it's off right now with today's help, 20 grand in each account, right? So the $100,000 account are kind of flirting with 80,000, right? So off 20 bits right now in each one. So 40,000. It really doesn't bother me at all because I talked about the exercise, the rule of thumb, when when the market's at an all-time high, run yourself through that half-life exercise. If you woke up tomorrow and your portfolio is worth half of the value, what type of position would that put you in? And it's not a doom and gloom philosophy. It's just hey, kind of just test your philosophy until the real thing happens, because right now this is the real thing.
Right.
This isn't hypothetical anymore. This is the real deal.
Yeah.
And, you don't have a choice when it's the real deal. You've gotta rely on sound investing principles, and that's to hold true, and give it time to heal a little bit, and work itself out.
Yeah. No doubt. Yeah, this is training ground for most of us who started investing after 2008, really, So, and I said that in that video, so, yeah, I mean, this is, if you come through this and you still are invested, and think about the experience that this is going to provide for you. I mean, now you're going to have a little bit of conviction behind, way more conviction about when you talk about, weathering storms and stuff. So, yeah, I mean, I'm excited. I'm glad to have a good community, like you all, and in the chat, I'm seeing everyone, excited as well about, these opportunities.
The support structure and mechanism didn't really previously exist. So what you just said, I think what you just said, hopefully other people feel the same way. I really hope that, because there's a ton of value out of that. And it's hard because I'm trying to reach back and give you guys a perspective from before 2009, because I've been investing an awful long time, and that didn't exist before. And that's why I'm so humbled at being able to come on and offer this message the way that I do. You want to take a crack at this question? Then I will too, Jason. Which dividend kings and aristocrats do you guys own? A lot of those were captured in that Gen X summary video from March, but certainly I can run down the list for sure.
Yeah,
I'll pull it up.
for sure. Yeah, I mean, like, even within aristocrats and kings, I think I saw. Let me look. I'm always kind of scanning the chat. Greg, Cammy, who always, is a fundamental guy, value investor.
Sharp.
So to clarify, right now as well, not only am I looking at, and I typically look at high quality companies especially now, I'm looking for a lower payout ratio. In other words, because once a payout ratio hits a certain threshold, that's when some companies start considering alternatives, even if they've been paying dividends and raising dividends for a long time.
That's true.
So the payout ratio is really, really important. So companies with, that's why even some of these, there's some really awesome companies that, like Microsoft and Apple, started paying dividends, and their payout ratios are super low right now.
Yeah, they are.
They're going to keep on paying dividends. So they're you could almost pretty much guarantee they're going to become dividend aristocrats. As far as like kings and stuff like Lowe's and Home Depot, Home Depot's not quite, I don't even think an aristocrat yet, but Lowe's is 60 plus dividend year growth, and their payout ratio is like 30 or 40%. It's unbelievable. So that's what I'm looking for, those types of companies like Lowe's. Let me think, what else do I own?
AbbVie's action is pretty interesting too, Jason. AbbVie has really held up well during this.
Yeah.
Pfizer's kind of taken a bath, but I really like Pfizer. Coke is an awesome buy here. They just came off of a phenomenal quarter. I think Gen X was a little bit surprised on the Exxon Mobil not getting a few more bids, but I can understand why that is. But Exxon Mobil is extremely oversold here. Okay. You want to be contrarian, and I'm not saying that everybody needs to go out and buy energy right here, But if you were ever looking to dabble and add a few points of exposure to the portfolio, I've never seen Halliburton trade this low. Halliburton is at $7 a share, and Schlumberger is not much less. It's crazy what's going on. It's crazy. This is worse than $25 a barrel oil, Jason.
Yeah, it's crazy.
It's
No
crazy.
doubt.
Yeah. So, ExxonMobil for sure, very well run, very clean balance sheet on ExxonMobil. I think you're right. I don't know where IBM is on the group of kings or aristocrats, but IBM at 100, I've never seen IBM this low. There's no reason for it.
I think it's about. I was just looking at them earlier because I think right now too is a time to really. So I mean, here's what I'm doing personally right now. I mean, I'll share it here. I'm literally I'm getting the this as a video. This is going to be a video I make. I think everybody should create a strategy during a downturn like this. I didn't do it in preparation for this, but once it happened, I began formulating one, and it was to literally, I'm not looking outside of my portfolio. There's no need to. I took all the time I took to pick the companies I picked, and so now they're in my portfolio, and a lot of them are 20, 30% down, 40% down, some. So
you got some 40% down stuff, Jay?
Yeah, some.
No, I'm looking. I do too. ExxonMobil, FedEx, Boeing.
Yeah.
Boeing is just crazy. Those are the three right there that are really taking them. I'm being honest here. Royal Dutch Shell.
Let me look at mine and pull it up.
Yeah, I mean some of the ETFs like VYM is down 18%. VYMI International down 24%. It's just awesome.
Actually, IBM is one. I initiated a position right when they switched their CEO, but that's the reason I never invested in IBM, because I didn't like their CEO. When that CEO stepped down, I invested in IBM.
Don't feel bad. It's been a real dog. I like their acquisition. I like their specialty cloud business. I really do. But here at 107, it's really easy to bash IBM. But I would look at it more broadly and say that IBM has been an underperformer for the last 5 years. It's been unacceptably bad.
Well, it's one of those right now. Okay, dividend growth of 20 years, and even right. So right now, so this is a good example of absolute crazy awesome opportunity. Okay, so they have a payout ratio of 48%, which is below the 50% threshold, which is really good. And they have a dividend yield of 6.3% right now, and 20 years of dividend growth. That's just incredible. So you could add a top-notch blue chip company that's. How much affected are they by what's going on right now? Not too much. It's, other than maybe some production, maybe their plants slow down a little bit or something like that. But yeah, so that's solid. But yeah, it's down. There you go. Yeah. I was looking at just the dividend scorecard on IBM.
Yeah, it's incredible.
Yeah,
that's a little more choppy. I know Joe Carlson would be unhappy with that, but look at that. 20 years growth rate of 11.5. Yeah, on paper. And again, it's easy to beat it up, Jason, but I've really taken a very, very aggressive approach toward IBM, and for the most part I've lost. I really have.
Look, here's one to pull. Pull this one up if you can.
You got it.
That no one talks about. But it has the metrics that I'm talking about right now. Eaton Vance. Ticker symbol EV. It's a dividend aristocrat of 37 years. They've been growing the dividend for 37 years. They have right now, because it's sold off, and in my portfolio it's down 30%. But its dividend yield right now is 5.19%, and they have a payout ratio of only 41%. And 5-year growth rates almost 10%. So it's kind of I guess you would kind of, it's an investment firm.
Is
So
this
it would
Neil
fall
Jones
under
right here,
finance.
Jason? Yeah.
Yeah. If you go to the dividend tab, yeah, there you go. So go to dividend scorecard on the far left. And see, there's the dividend growth, 37 years. You see the payout ratio, 41%. So this is a perfect example of something right now, because all financials got destroyed and decimated.
Yeah, man, that's for sure.
Yeah, so something like that. This is what I'm looking at. So I guess my point was, I'm really not looking for anything new. I'm just dollar cost averaging down into my own personal portfolio.
Do you own Eaton Vance?
Yeah.
Jason? Yeah.
Yep. It's in the portfolio.
Yeah. Nice. I like it. You want to play, Jason?
In your guys' opinion, what stock do you feel will go up the most by percentage to the end of the year? I have a bet against my cousin and brother. Well, looking at today,
yeah, Carnival Cruise Line.
Could be.
Could be.
I don't know. I mean, it's hard to say because some of these tech stocks too that got beat down, they jump really fast and hard. Intel, Intel is an example of that. It jumped today,
huge,
20% in one day.
That's insane.
Because it was at $75 or something like that before the drop. And let's see, let me look at it.
Yeah. I would stick to a couple that I've already mentioned. I'm very interested to understand what's going to happen with oil. And if there's a catalyst in oil, it's going to skyrocket. And that's usually what it takes. And I'm not saying that there's going to be a catalyst. What I'm saying is that's my hypothesis. So you're going to see companies like Halliburton and Schlumberger, which are number 1 and 2 respectively in the world. Those are going to jump because Schlumberger at $14 is silly.
Yeah.
Just my thought.
Yeah, I own a couple LPs, and they're super high quality midstream LPs that they're down. Those are two of the companies that I hold that are down the most right now. But they EPD, which is the biggest midstream company, and that there is, it's down. Let me look at my portfolio.
So Joanna asked what is a good dividend Vanguard ETF. The two that I'm aware of, VIG, I've never owned, but VYM is what I own. I like it. And it depends on whether or not you're looking to go after domestic exposure. If you don't have either one, I would certainly go for domestic exposure first before you start branching out and start seeking some domestic. But VYMI is the international exposure. And then VYM is the one, and that's the flagship holding in my Roth IRA. I love it. It's great. Yeah. Diversified exposure. And to tell you off the top of my head how many holdings, 158, I think, maybe 158 holdings in there. That might be a little light. I'm just drawing that from memory, but you can check it on the website that I brought up there. I can bring it up again, certainly, and show you. It's pretty easy to do. Let me cruise.
Yeah, that VIG is solid. That's two. That's the one that's the kind of dividend ETF I like. It's similar to DGRO, and that one is but it's because it depends. Like you said, I like how you always caveat everything with my risk tolerance. I'm 41. I know I got 20 years, right?
Yeah.
Someone to 60, their risk tolerance may not be, because like VIG, I'm looking at its top 10 holdings. It's Microsoft, Visa, Procter & Gamble, Walmart, Johnson & Johnson, Comcast, McDonald's, MDT, Abbott, Costco. I mean, that's really, really solid, but they're more growth companies. They're not high yield.
Yeah.
So, but I think it in 10, 15, 20 years, those being the top 10 holdings, I mean, you can just have incredible gains in a ETF like that, which is similar to my favorite, which is DGRO. But again, it's about where you're at in your investing journey, not necessarily our opinions on.
So I hope you were able to follow that, Joanna. It's a really good question, and I would rather teach people how to fish than cook them a fish dinner. And this is good, and I know Jason predominantly uses a plethora of products, and Fidelity specifically. I'm just using Vanguard to kind of give you an idea, and you can shop all these out. Certainly, you can just Google it. But you want to know what renderings are turned back by the Google search, what it means when they bring up those Vanguard offerings and the Fidelity offerings, and whatever other firms that some of the other major brokerages are offering. But I'm personally invested in that one, and then Jason's offered his too. So I hope that helps you. I think it's great. It gives you diversified 3% yield, right, Jason? It's kind of a safe way to go, diversified, get the drip program. You really have it all packaged into one, and it's kind of an easy way to invest. Really, it's a no-brainer if you're willing to buy and hold.
Yeah, for sure. Yeah. I mean, like you said, a lot of these. I had someone direct message me on Instagram, and they were asking. They have their entire portfolio in VOO, $16,000 worth of, and they were asking me should they move to single stock. I was like, don't. I would not sell $1 of it. But if you want to invest in single stock, then start now investing in single stock. But don't sell any of your VOO. With some new cash, maybe start investing in something else. But there's no reason to sell VOO, especially with that kind of, if that's your only holding, that the drip on that right now is going to take, really help you through this downturn. So
it's just that it's just that base. You know what I'm saying? It's that base. And I know there's going to be money managers that start ragging on passive investing right now because they haven't been able to do that for 13 years. So stand by. The floodgates will open and all the naysayers will come out. And what they're trying to do is play to an audience that feels like somehow they've been given a strategic edge for 13 years. And now all of a sudden that strategic edge is gone and that they need to go and seek out the services of a money manager. And that's just not the truth. It's just not.
Right. Yeah, no doubt.
But I think that's prudent. Single stock investing is not for the faint of heart. It's right, Jay?
That's what I caveat. I told him, I was like, the direct question was, would I have more fun? I'm kind of bored. Would I have more fun with single stock? I was like, I said,
first fun. That's one way.
Yeah. Are you willing to, have your portfolio swing wildly crazily, 30, 40, 50% up and down both ways. It works both ways. If so, then yeah, you're going to have fun. If not, then you're not going to have fun.
I do contend that it takes a higher level of tolerance. And what I roll, Jay, a 50-50 portfolio. And I don't know if people expect to tune into my channel and be like, oh yeah, this is the Independent Investor channel. He's investing to the core. No, not necessarily. I just am very, very in tune with my risk tolerance, and my portfolio reflects that. That's the key that people need to understand, is aligning what their real true tolerance to the market is. And it's hard to define that in an upswinging market every day, Jay, right? In this bull market, it's been hard to define that because people can trip and fall into the market, make money. And it's like, this is incredible. This is the greatest thing I've ever found. There's no downside. And what people are finding out is that there's two sides to the market,
Yeah. I got a question for you, or something I think we should, I think it's probably on the top of everybody's minds is, what kind of areas of the market do you think will, do well if we stay in a prolonged, type of environment like we're in right now? Like, I mean, I have some ideas, but I'd love to hear yours as well.
Yeah.
I don't know if you thought about it.
I love utilities. I love utilities. There's some single stocks that have been really rising to the top for me, and that's Walmart, Waste management certainly is worthy of that discussion. Um, I would say I had another one that was really quite good. I think I'm going to say a pick that's not going to bode well with a lot of people, but I think financials right here from a valuation perspective, I honestly think they're kind of like a regulated utility. Okay. And I want people to think about that for about half of the valuation. Okay. Utilities trade at a pretty rich valuation right now. If you haven't paid attention, you're going to have to pay up for that quality, whether or not you take the Vanguard's ETF or the Fidelity option, whatever you choose to do, or try to single stock pick in the utility sector. I'd be very careful with that. Some great companies out there. I like the top 5. That's it. I don't stray very much, but I like General Mills, stuff like that kind of comes to the forefront a little bit. I like stuff like that. I like an offering like a Mondelez, which would be kind of the mirror image of a Kraft Heinz food, which I do think is going to bottom at some point. Hell, I'm not going to be the guy that says where that is. I own 81 shares of it right now, and of course, just in the bath. It jumped 20% today. Big whoop-de-doo. It's about freaking time. It's just been a terrible stock. But sectors that may benefit in a downturn, materials have really taken a bath. It's just been really unfortunate. I don't think that energy has a whole lot more to the downside to go. Businesses are going to start going bankrupt in the energy.
Well, I guess I get. Let me rephrase it. So that I guess I'm saying, because I'm actually starting to think it through for like a quarter or two, like earnings wise. Because some people are like, I think, yeah. I mean, and I was thinking like you're thinking with Walmart and those companies that, I mean, just the announcement today and the discussion today was that, like, Walmart, Target, CVS, Walgreens, they're going to be, and their CEO, or what, I don't know if they were CEOs, but they were high up representatives who were at the press conference. And they're not necessarily my picks, but just I think those kinds of retail are going to do well. They're going to try to stay open.
I agree. I had Costco come into my mind, which I'd rather own a Costco than I would a Home Depot, because although I do own Home Depot, I think housing may start to feel a little ripple. The report next Friday is going to be very telling for new home starts, I believe, is the report next Friday. So I'd pay attention to that. I love both Lowe's and Home Depot. I think they're best of breed. There's not a whole lot behind them anyway. But I think Lowe's is the better buy for valuation. I just can't. Every time I go into a Lowe's, I don't get the feeling that I get when I go into a Home Depot. I just think Home Depot is a phenomenally run business. That's what I think.
Yeah, for sure. Yeah, but I mean, I think the same way you were thinking as well was because, and so that you were also looking at the other perspective is stuff is going to sell off and it's going to have a bad quarter or two, but that's very short-sighted to look at these world-class companies for only a quarter or two, and then not in a year or 2 or 3 out, right? Because you could get them at such a discount. So I'm looking at it too. But so I think my kind of areas where I think are going to just kill it, or not kill it, they're just going to kind of, you're not going to get real huge discounts, or like the pharmacy, the big pharmas like AbbVie and Johnson and Johnson, the healthcare related stuff, and then like the big retails that are providing, like, people are just freaking out. They're gonna stay up. They're gonna have good quarters.
Dude, Walmart's cleaned out right now.
Target's
cleaned out right now, bro.
Yeah. I went to Kroger tonight, and on my way home, I went to Planet Fitness. It was like a ghost town, and Kroger was. I was walking in the door, and I almost bumped into a lady. She's like, "Oh, excuse me." She's like, "It's crazy in there. They don't have anything."
Yeah, I saw the lines on Facebook for Costco. You see, Dave here says Kimberly Clark for certain. Kimberly Clark's actually done fairly decent through this downturn. I'm satisfied. I doubled up on Kimberly Clark through this downturn. Where the hell I got it, I don't know. I just don't know. I would tell the group if I knew, but I did take a double up on Kimberly as well as a lot of other positions. My portfolio's stacked right now, Jason. It's stacked.
I wonder. I know Dave sold Clorox. He might be regretting that.
Wow, really? See,
Yeah.
Clorox has always been, it'd be one of those stocks that I would put on the Gen X dividend investor list to have the deep analysis that he does of the stocks that he doesn't own, you know?
Yeah.
I'd like to know his thoughts on Clorox because it's one of those top five. It's actually a company that is very well known, and it's one that I've never owned.
I don't think I've ever owned it either, man. But it certainly came to mind that it is one that is essentially a hedge against what's going on right now. And then if you don't mind, so it's those kind of retail and then healthcare and then tech, your tech companies, because
Why?
so here's a few tickers I'll throw at you. I actually bought my very first share of Adobe. Which
Awesome.
right. So it's this crazy discount. So Adobe and your Amazon. I saw there was this conversation about Amazon. I mean, obviously Amazon is going to be the online retailer that's going to probably carry everyone staying at home. Everything's at home, right? And then you got so a lot of tech, like Google obviously. So they're doing the whole they have. See, I used to work at 3M, and I worked in the healthcare division of 3M, and we partnered with Google in some healthcare analytics stuff, and that part of Google was called Verily. It was an acquisition of Google. Nice. So Verily side of Google is going to facilitate this whole the testing of what's going on.
Are you thinking? Because I do invest a little bit. You know how I invest in those, what I consider pretty higher growth stuff. I invest with some very, very low scale in those in the M1 account. You know that.
Yeah.
Partial share. I've been tired of going into Amazon. Sometimes I win, sometimes I lose. I've been tired of trading around in Amazon, and I've just become an investor in it. And M1 has allowed me to do that. Google, same thing. I do own Adobe in that CRM, Salesforce as well with the cloud computing. So you can just kind of throw that out there, right?
Yeah. With the stay-at-home stuff, I mean, it's gonna, So I do. That's why I was saying my Roth IRA got decimated because my DGI portfolio is all dividend growth, and then my Roth IRA I'm going more growth oriented in that portfolio.
Like good growth?
Like Apple's, Amazon. I got the tech giants. I got Fang, and then I got Adobe, a few companies like that.
Yeah.
So, but it's a smaller portfolio. I don't put as much focus on it.
Yeah.
And I've just transitioned to that, in my since I really started building up this Roth. But because the Roth is, because I can get those. I wouldn't invest in those things in my taxable account because obviously you have to pay taxes if you got big gains on those capital gains, right? So
yeah, I don't know. What do you think about my philosophy of trying to stay real close to the vest and keeping my tax protected stuff tax protected, not really trying to grow my taxable stuff very aggressively right now. What are your thoughts on? Am I stupid or
no?
I don't know. It feels right, I don't know. I kind of got away from a little bit. I know Joe Carlson has a really good explanation, and you've offered some really good explanation, and Dave as well with Hidden Freedom Investing. You guys have got some really good thoughts behind that. It's just not. I'm not a high income earner, so I've got to be kind of careful with, getting too wild and just throwing money into the market and not having any type of acknowledgement to, the tax implication, and that money, I'm still sitting on that big pile of cash, but I'm maxed out with the Roths. That's why I'm trying to solicit to have the tax ceilings lifted. That would, I'd win the lottery, Jason. I swear. If they said the 2020 caps are lifted, I'd fund them right back up with 25 grand each right now.
Well, and it's not part of the stimulus, but that's part of the tax plan that's being thrown out. Is like be able to invest 10K tax free in a taxable account.
Yes, yes. And I don't understand why they're kind of missing the point there, because statistically, most people don't enjoy the benefits of an individual Roth account, an IRA, whether it be traditional or Roth. So you have the existing account there, and I don't know if they're looking to combine those as one and the same. It seemed to
No, I think it's. I
separate.
think.
It
I
is.
think the
That's
proposal. The
wow.
proposal is in a taxable to be able to invest your first 10,000 every year tax free.
Oh, that's legit.
Yeah,
That's legit.
and then you'll still have your Roth or your traditional as well. This is a taxable. I think Jamie Focus Fire made a video on it. He broke it down too.
Right.
And I may be off on the if it's 10K. I'm not sure.
You're right.
Correct.
It was 10K. The way I understood it was 10K allowed to be invested without tax penalty, and there was going to be tax protection. I mean, really, what's the use? You can invest 100,000 in a taxable account, right?
Yeah. Yeah.
And you can do that on Monday.
Right.
I want.
Yeah. I mean, I guess the way I was understanding it, it was like the first 10K was in a taxable, tax free. So you could, but I don't know. That would be tough to get through legislation. But I liked it. I like the idea of it.
For real. We can use, I mean, it's interesting how us folks that are trying to get ahead a little bit, those butterflies in the stomach or whatever, man, Jason, I don't mean to come on here and act like I'm freaking Iron Man, because I'm not. I work hard for my money. I'm supporting a family. It's all for them anyway. I don't care about me and care about the family, but I know the right way to invest. And, it's just going through these times like today. It's like, did I do the right thing? And it's like, yeah, I did the very best I could to prepare myself for the downturn and invest where I thought were good inject points, which they were. I spread it out over 8 buy points, Jason. That's what I did. And now I'm full in right here. Low 20s, I'm in.
Yeah, I've only got about $800 of that I can invest in my Roth left.
I had 800 this week, and I bought 25 Pfizer. I mean, seriously, it was just I felt like it was the time to press the accelerator. And
and so that that's what I was talking about. I was only investing 125 a week, because 125 a week would go 52 weeks, and that's how I was going to invest until a downturn. So I was intentionally investing that way in the Roth, and then when it started dropping, I started dropping $500, once or twice a week. But now I'm almost out, so I think I'm going to hold off to make sure we find a bottom for that last $800. But
yeah,
it still won't make too much of a difference, because I'm pretty much maxed out, like you as well. So we got you. Well, you're up at 167 now.
Yeah, I needed the boost from JMac investing. That was the problem. I was hanging at 125, and then boom, I doubled my exposure here, man.
Not quite a Matt Money boost, but close enough.
That was wild that night. Wasn't that wild?
Yeah.
He comes on, and it was weird. Like,
who doesn't love Matt Money though?
What the freak? Jesus, I've been trying for 75 live streams, and
all of a sudden, yeah,
that was fun, man. But and we got about maybe 18 or so minutes. I'll cap it at 2 hours, man, for sure. But I sure appreciate you coming on and helping me, Jason, for sure. It's a lot more fun for me, and I do just enjoy talking to you as well. You had some killer insights tonight on some real talk, and I like that real talk to come through. What I said about coming on here and jumping up and down and throwing a fit about spilt milk is not something that I'll do. But I will say that it's okay to look at it and be like, wow, I didn't see that one coming, because I didn't see this coming, No,
yeah, it's been crazy. I appreciate the opportunity. I'll probably go ahead and jump off and let you finish up. I enjoy hearing you wrap it all up, and I appreciate everybody in the chat and the conversation that was had.
Yeah, absolutely. Thanks, Jason. Appreciate it, man.
All right. Thanks, sir. Have a good one.
You got it.
All right.
Cool, guys. So big thanks to JMac Investing for coming on here. Really interesting time for sure in reflection of what's gone on over the last 3 weeks. Certainly want to give a true impression and a true reflection. And that way people don't come on and they're like, wow, these people are like robots, and there does need to be some level of robotic deliberation in your stock market deliberation. Honestly, make strong moves, have a short memory, don't dwell on stuff. That's just going to consume you. Remember, control your money. Don't allow your money to control you. We talked about some really interesting themes tonight, some stuff that we thought would probably be good pickups here. Honestly, I comb over the market and everything seems to jump out. Disney at 95, that's really disheartening. It just seemed like a couple weeks ago. And if I backtracked it, I think when Disney Plus was rolled out and it was at $158, the thought actually crossed my mind to take some profit there. Again, do I cry about spilt milk? No, not in the least. I actually ended up buying more shares in Disney on the way down. But for you guys that tune into the message, certainly, and you're looking to add those stocks, Disney is one of those stocks that you can buy and own forever. It is one of those on the short list of stocks that I've rolled out through the history of the channel. Apple Computers, honestly, Microsoft could fall into my top 10 of stocks to own forever. JP Morgan here, you had it sub 100, and it just doesn't give you a whole lot of time to sit there and wave at you and say, hey, buy me. I think the trick is to increase your awareness. I think if you're really interested in this craft, it is a very, very interesting way to build wealth for yourself. And I know it's very, very difficult to make that stick, especially in times like this, times of volatility when you're looking at it and you just don't understand why the heck you're doing this thing. Certainly has a lot to do with the exercise that I demonstrated tonight about the ability to direct connect yourself to the market and tax protect that money. We talked about that in length tonight, but the wealth preservation piece cannot be overstated. Okay. I showed you in that exercise a $500,000 savings just for one individual. Guys, there are thousands upon thousands of people out there who don't get that message. So for those few in the group who have made their way on here, who have actually received the message in the way that I expect it to be received, I would have trouble sleeping, because in this life, there's really not a whole lot of things that you can that you can find that really truly do point you in the right direction to some level of financial success in life. And this is it. It really is. I don't believe there's any better way. I believe we're absolutely revolving around the tip of the iceberg in talking about some of the many, many different stocks and ETF products that people use. But really, when it comes down to it, those stock and ETF products are invested in the stock market for the self-directed investor using one of two, if not both, the way that I do it, either passive investing or dividend growth investing. I really do contend I run a 50-50 split because I absolutely have a laundry list of substantiation behind both programs. I really do. There are drawbacks and there are positives to both. There really are. Passive investing allows you to kind of fall asleep at the wheel and wake up 40 years and look at your portfolio and say, wow, right on. I've matched the market year in and year out. I've captured all of the appreciation that's been rendered. I've captured all the depreciation over the years, and I'm happy doing so. Stock investing takes a little bit higher risk tolerance. It does give you that little bit higher opportunity at a little bit more accelerated growth, because as these single stocks can really decelerate in value, they can really turn on a dime and add appreciation very, very quickly. That was reflected today, certainly in some of our 20% gainers. These are enormous companies to trade like that. We talked about Intel tonight. We talked about Kraft Heinz food as well. The action on those stocks are really interesting, and it really does tune you into the volatility of single stock investing, the necessity to have a little bit more longer term horizon when you do own single stock, because you may have to take those into multi-year downturns only to realize that they come back in a short amount of time to outpace what you would have received as a passive investor in, let's say, an index fund or an ETF. So super, super important to understand those two strategies. I don't spend a whole lot of time, if any, on my channel talking about where the market is going to go. I typically defer that conversation and defer it to other channels that want to engage in that line of dialogue. I'm very aware of what I do know in this life, and I'm very aware of what I don't know. I'm aware, okay, and trying to pick the best time for me to inject my hard-earned dollars into the stock market is hard enough. Let alone trying to call a bottom in the market or trying to call what I think as far as what's going on right now, and especially where the market is headed next. However, for the sake of discussion, we do offer up what I think is going on right now. I'm not one of those guys that really buys into a lot of the hype. I'm not one of those guys that's rushing to the store and going through a doomsday prepper type of exercise right now. I don't think like that. Hopefully that calm demeanor resonates through the group. I hope. If you can take a small page out of my playbook, calm heads will prevail. Okay. And that's just the way I am. I know there's probably a lot of folks that have a lot more intensity and a lot more passion and definitive spirit about where they think that the market is going to go from here. I applaud that sincerity and devotion to who you are. That's just not me. And my calm demeanor has worked just well for me over the market. I've been through this before. I will weather this. There's no doubt about it. And I will come out of it stronger. And I will come out of it with the even better maturity to reflect back again on what happened, how I was prepared, how I can prepare for the next one, how I can come out of it a stronger investor and really build up the portfolio to hit that next milestone. I'm really trying to set myself up to go ahead and surpass that next $500,000 milestone in my life. And we'll get there. We really will. The moves that we're making here in the short term should render those results down the line, if not over the short term, the medium term, or even the long term. I'm prepared to win in either market, and that's the key for each and every one of you guys is to transition from a non-investor to an investor and understanding the benefits of investing, but understanding the benefits of investing in all markets. Okay, not just the markets that you think are awesome, and then when they're not awesome anymore, you want to step to the side. It just doesn't work that way. Investing is one of those things that you have to get used to investing in all markets. It's very, very important for you to understand that, because I tell you what, you start jockeying around, you're going to prove to yourself, if you're honest with yourself, that it is close to impossible and extremely futile to try to engage in that type of activity. Sell now, buy at the low. I get this question all the time. Ryan, why don't you just sell everything now and buy when the market is at its bottom? If there's anybody in the group here that's been invested through this downturn, they can rest assured say that that's probably not possible at all. It's pretty close to impossible. So another shout out to JMac. I really appreciate it. I appreciate all the channel creators coming on, making it another successful live stream for this Friday. We will stay on schedule next Friday as well. I enjoy the heck out of providing these, but quite frankly, the strength of these live streams lies with you guys. Okay, I'm very humbled at the opportunity to facilitate a discussion on investing and stock market. However, it wouldn't be the same without you guys. If the strength of the subscriber base and the devotion on your end dies down, I will cease this product from existing. There's no doubt in my mind. But until you guys do that and continue to be the fuel that fuels this fire, we're going to continue to push this message forward. We're going to continue to attempt to build this coalition of people who are like-minded and are really out for themselves. No doubt about it. This is the one community that you can join and be in it for you. You don't have to be in it for me, okay? You don't have to be in it for me. You don't have to join this live stream to support me, okay? Flip it in your mind, okay? Be selfish, okay? Take whatever you need from me. Trust me, I'm fine. I take this information and I benefit from it just like you should, okay? So I implore you, do that very thing, okay? Take these little tidbits, allow them to make you that much stronger, and allow them to make you that much more really defensive in mind when you're looking at dealing with this volatility. And you'll find that you're in a class, a very rare class in and of itself. While everybody else is running to the hills, you can sit back in your lazy chair and wonder why. All right, because I do that a lot. I really do. Guys, thank you so much for tuning into the live stream. Really appreciate it. Stay tuned. I've got uploads queued up for this week, and appreciate you guys tuning in and all the support on the single video uploads on the channel. Keep in mind, if you do want to be a guest on the live stream, certainly take me up on that. There's a few channel creators that I'll continue to extend the olive branch to. If you want to take me up on that, man, it's a lot of fun. I think you'll find it very rewarding to come on, get yourself a dab of exposure as well on the channel. I have no problem with that. That's why I open up this 2-hour block to jam as much value as we can every single week in it. And I believe we're doing that. Guys, take it easy, and I'll check you next week. Thank you so much.